Hey guys. Okay. Oh, hold on. Let me see something here. We got a live stream. So we are starting this new program here. We're going to come on every day at 4 o'clock and give some feedback and some help for our community. This is going to be in Positively Placer and as well as here on my personal feed. And today we have two of my favorite people. We've got Kenny and Jennifer from PRMG. And they are a lending company who I use frequently. And I think they're awesome. And they're here and they're going to talk to us a little bit about forbearance, kind of what's going on with the market with lending. And so, Kenny, why don't you introduce yourself?
I'm Kenny Clark, and I'm the branch manager with PRMG. And thanks, Julie. We think you're really awesome. So thank you for putting this on for us and helping us get the word out there of what's going on in the market. So I guess the big word that everybody's hearing today is forbearance. And what is it? You know, people go, well, what is forbearance? Is that where I can get rid of my payments on my loan? A lot of people know forbearance with student loans. They hear it when they put their student loans into forbearance when they don't have to make payments. But basically what forbearance is, it's a temporary pause on your mortgage payments. It's not forgiveness. It doesn't relieve you of the obligation to make the mortgage payment, but it just pauses basically the payments for a certain period of time. And typically that's within, you can request a forbearance from your mortgage servicer, which is the person or the people who are servicing your loan, meaning that's who you're making your payments to. And once you request that forbearance, they can basically pause your payments for up to 6 months initially. And then you could actually even request an additional 6 months of forbearance if needed. So with the CARES Act that Congress has just passed, they said that we can, as borrowers, go to our current mortgage servicer and request a forbearance. So what does that mean? Well, that means that we need to be proactive in what they're talking about, okay? So you need to ask your servicer, hey, when are those payments due? Just like when you go buy like furniture at a furniture store and they say, hey, you don't have to make payments for 3 months. Well, those payments aren't forgiven, they're just put off for a period of time. So you need to know, when are the payments due? Are they all due at the end of the forbearance period? Are they all due at that 180-day period as a one lump sum? So your principal, interest, taxes, and insurance, plus any accrued interest? Or are they going to spread that out over a period of time where they're going to up your mortgage payments? Let's say they're going to spread it out over a 12-month period. Well, so they're going to take the total amount that you push back, let's say, divide that by 12, and then they're going to increase their mortgage payment by that amount. Or they could add it to the total end of your loan, the end period of the 30 years or 25 years, however long you have at the very end of it. Most of the questions that I'm getting.
So how will folks know? How will folks know if what type that they're getting? So I've had a couple people, they're like, oh, I don't have to make mortgage payments, and they think it's like frilly-nilly, you know, no big deal, and they don't need to make any payment. How would they know which type they have?
So really they need to ask their servicer, because the person, or the company that is servicing their loan, meaning who they're making their payments to, everybody's going to be different. So I would say, call your servicer, ask them the question. If you really need a forbearance, ask them. Say, hey, what does this entail? When are the payments due? What are the positives? What are the negatives? and get it in writing. If it's not in writing, it doesn't exist. That's in our business, period. So it needs to be communicated from the servicer on how they're going to collect the money, collect their payments that were caused, and it needs to be in writing.
When you say they have the forbearance in 80 days and they can't make the payment, the amount that's due, they're going to split up over 12 payments, and people can't make that payment. What will happen to them next?
Well, that's why you need to ask the questions before you get to that point. You need, if you're really in need of forbearance, and it's not for everybody. It's not for the people who have, $1 million in the bank and still have a job and can make their monthly mortgage payment. It's for people who really, really need it. Because if an individual goes and asks their mortgage servicer for a forbearance and they really don't need it, now they're creating a undue hardship on the system, okay? And almost like they're taking it away from somebody else. So you really need to, if you're really in the position where you need a forbearance, you need to make sure you're asking all the right questions. And myself, Jennifer, who works with us, can answer any question and get you in touch with the right people if you do have any questions.
So if they get a forbearance and they talk to their servicer and they have given them something in writing that comes in the mail, would you guys be willing to take a look at it and help them better understand what the agreement is that they're making with their servicer? Absolutely. Would you guys be able to take a look at that for them?
Absolutely, yes. And I would say definitely do that. Talk to a professional who knows what the verbiage means. Get it in layman's terms. Jennifer and I do this every day, so we are kind of almost numb to it sometimes. But you want to be able to get it into terms where you understand what you're getting yourself into, and that you're not making a bad decision or a life-altering decision for your family.
Awesome. That's great. Thank you guys for doing that. What are you guys seeing right now as far as interest rates are going for people that are still buying? I mean, we have been deemed essential, and I know that term is, kind of thrown around. People don't really understand exactly what that means for some, for some in our business, but we definitely have people that still need to buy a house right now, that there's all kinds of reasons, we won't even go into that, but there are definitely reasons that require us to still be transacting business right now. What are you guys seeing as far as changes during COVID of buying a house? Are you seeing anything that is different now than it was, say, a month ago?
Julie, interest rates are awesome right now. They remain great. At PRMG, we have seen a few changes, but not a lot. They have tightened up the credit score requirement on government lending, on specifically FHA lending. We used to be able to loan with a 580 credit score, and our particular company has raised that to 620. A lot of people in the industry have raised it quite a bit higher. We're very lucky to work with PRMG. We're in the retail division, and we're really blessed to not have too many changes. Another slight change is a little bit more money down on jumbo loans. So if you're buying a more expensive property, there's a slight change there.
So right now, you guys are needing a 620 credit score for your government programs for FHA and for VA,
both.
Or just FHA?
Both.
Okay. And you guys lend not just in California. You guys lend outside of California.
Yes, we loan
as well,
in 48 states. We just don't loan in New York, and I believe it's Wyoming. Everywhere else we can lend.
Okay. What about you, Kenny? What are you seeing as far as like rates go and those kinds of things? Are there seeing anything else that we need to be watching out for or be careful of right now during this process, even with like refinances?
Well, I'll concur with Jennifer says. Rates are fantastic, and we're all in a very fluid situation. So things are changing sometimes daily based upon guidelines and programs that are staying or going away. We're hearing from other people in the industry that their guidelines are tightening up even more. They're getting rid of down payment assistance programs, and that's just not always the case with every lender. So you always want to make sure that you're working with a company that is strong, who's been there through the hard times, and who will be there through the hard times. And just make sure you're getting the correct information no matter what it is. Now, as far as refinances go, ton of refinances, ton of purchases. The purchases, I think, have slowed a little bit. I don't know, you can probably speak to that a little bit more, Julie, but just because I don't think the showings have been going on over the past 2 weeks. But as far as the refinances are going, we're doing a lot of cash out refinances because people are saying, hey, interest rates are so low, I can take out $20,000 and $30,000, put it in the bank, and if something drastic happens, I have that money sitting there. And if it, really low interest rates like they have been now are in the threes, that's almost that's almost free money. I don't really want to say that, but it's basically like almost free money. Rates have never been this low in my lifetime, anybody's lifetime, I think, and they're going to stay low for the foreseeable future.
So I have a question. So some people are saying we just lost sound, but I'm not sure if other people can. Maybe can you guys give me a thumbs up or something if you can still hear? But one of our guests that are making questions is saying that in Texas they're requiring, some of their lenders are requiring a 660 for FHA. No. Are you guys seeing some changes as far as across the board? Are the changes that you're seeing regional or are they national?
It's lender to lender. So it's not regional. It's not on a specific area that you're seeing this. It's lender to lender, and it's all based upon their risk and what their risk level is as far as going out into the community. Because you have to take into consideration, hey, is this a broker who is going to a lender like us and giving loans? Well, that's going to be more risk because there's more people involved. If you're going from a retail loan officer such as Jennifer Martell and going directly to the bank, well, now there's less risk, and that's where you don't see the increase in scores. And again, it's limited.
And Julie, I just actually closed a loan in Texas this morning with no changes whatsoever. We loan, like I said, nationally. We don't have any issues. Our credit scores in Texas is the same as it is here. We only require a 620 for the FHA, USDA.
So agent friends that are watching from across the country, if you're having struggles, definitely reach out to Jennifer. They lend in 48 states, 620 for FHA. Definitely something, open up your opportunities for our clients. I mean, we are here to serve and try to help as many people as we can during these, changing times. And the more ability we have to help folks, the better off, we are. I know in our area, you touched on the fact about, how we're showing. We're definitely making some adjustments to be able to be use our shelter in place and protect both our team and our clients. And we're implementing virtual open houses so that we are limiting, any exposure that way. We're doing very detailed walkthroughs. That's helping. Obviously, you get to work with lending professionals without having to meet face to face. Everything is definitely done online. So I know that I'm here to serve clients and be able to ask questions and help as much we can during these changing times. And Penny and Jennifer have both said that they're here for questions and willing and able to help out as much as possible. So if you guys have questions about any forbearance or struggles you might be having, or you don't have any struggles yet, but you're concerned for the future and you might want to do a cash out refinance right now, maybe now is the time to take advantage of that and make that happen. So reach out to these guys. I'll post their number. And let me see, I don't have any other questions. Just so you guys know, this is a new thing that we're doing. This is called the current stream. We're navigating through these challenging waters right now, and we're going to be going live every day at 4 o'clock with a new, some other topic about current to our area or local to our market here. Not just real estate related, but all kinds of things. Jen and Kenny were my guinea pigs today. Luckily, I know them and work with them often. So thank you, both of you, for coming on live with me today for the current stream. And hopefully we'll see you guys. Well, hopefully Kenny and Jennifer will join us as guests tomorrow, or as audience members tomorrow, but we'll have a new guest on tomorrow at 4 o'clock. So thank you guys. Do you guys have any closing statements you want to say?
It's a great time to purchase. It's a great time to refinance. Don't be scared in this current market. We would love to help you answer any questions you have. If you have any for myself or for Kenny, just get our number from Julie and we'd love to help you. Kenny?
Yeah, thank you, Julie. We really appreciate it.
Thanks, guys.
Getting putting this together once again, and if you have any questions for Julie, make sure you reach out to her. She's awesome and up there in Lincoln and Placer County. So
Thanks, guys.
thank you.
Have a good one.
Bye.
See you soon.
Bye.
Bye.